everybody. Welcome to today's episode of the Daily Dose. Today is Monday, November 28th. I hope everybody had a good holiday weekend. So we'll just get right into it today. The markets were down today. U.S. stocks tumbled Monday as unrest in China over the nation's restrictive COVID controls weighed on global sentiment, and Wall Street returned from a holiday weekend. The things going on in China are actually insane. I've seen some videos that have come out of China, and it's turned from a COVID kind of policy just to a general population control policy. I know that they have a QR code on your phone, and if it's red, then you immediately have to be taken into quarantine or like some camp or something. And originally that was if you had tested positive for COVID, but they actually turned everyone who was at this protest, they turned all of their QR codes red so that they no longer had any access to anything. And they basically just, you cut them off completely from society. So it's dystopian. It's kind of unsettling. And, just another reason why you also don't want to have a government that's in control of like a central bank digital currency, because then they can censor you from literally everything if they don't agree with what you think, like politically. Say a tyrant is in control of a nation, and they also have control of a central bank digital currency, and they can see where every cent is at every point in time, and they then say they cross-reference your data with who you voted for, and which is not private, and say that they wanted to cut you off from all transactions if you didn't vote for them. That's something that's very possible. So another reason why I am bullish on Bitcoin and self-custody of Bitcoin and all that. But scary things happening in China, and that also directly impacts Apple, as I believe one of these major protests was at a iPhone factory. So the workers are not happy with how they're being treated there, and began protesting, and China shut that down really fast. So the S&P 500 was down 1.5% today. The Dow Jones was down around the same, and the Nasdaq was down 1.6. So generally a pretty down day after we've had some rallies the last couple weeks. Investors assessed widespread protests across China's major cities that began during the weekend over the country's zero COVID policies. And that reminds me of another thing. It's insane what's happening in China right now. There are people calling for Xi Jinping to step down, and obviously he's a complete authoritarian dictator. It's just complete fascism. What's happening in China. It's scary. What's happening around the world right now, but in China especially at the moment. The U.S. dollar gained against other currencies as the yuan slumped, or the yuan. Oil plunged and hit 2022 lows, with West Texas Intermediate crude futures settling at around $77 a barrel. Shares of Apple sank 2.6% Monday on concerns that turmoil in China may pressure a key manufacturing plant in the country and further weigh on the already constrained iPhone production. Bloomberg also reported that across the country may cause a production shortfall of about 6 million iPhone Pros this year. And I saw another statistic that in Apple stores right now, their inventory is down anywhere from about 20 to 30%. Remarks from the St. Louis Fed President, James Bullard, also dampened the mood on Wall Street Monday after he asserted the U.S. central bank has a ways to go on interest rates. Bullard said the federal funds rate needs to be lifted to at least a range between 5% and 5.25% to be sufficiently restrictive to tame inflation. I do think that the Fed is going to continue this extremely hawkish dialect until they're ready to pivot. like I think up till the point in time where they pivot, they're gonna have this extremely hawkish uh, dialect, just because just because they know how the markets will react if they start to sound more dovish before they really want that to be priced in. I mean, we've already seen just from one drop in the CPI how much that affected the market. I think they want to keep this uh, within reason. I think it's sad that the Fed has this much of an effect on the markets and that they just have this ability to raise and lower rates, and that's not like a free market decision that's happening. Um, yeah, I think that actual free markets and what the United States defines as free markets are two different things, but it is what it is. Crypto world was in focus following a report by Decrypt indicating digital asset lender BlockFi will file for bankruptcy, and that actually did happen today. They filed for Chapter 11 bankruptcy. Investors face a barrage of economic data this week as they head into December. The government's November jobs report, housing data, a second look at third quarter GDP, and PCE inflation are just some of the key releases on tap. Monday's moves come after a week of modest gains for stocks that saw the S&P 500 rise 1.5%, the Dow 1.8%, and the Nasdaq 0.7% over the 3.5-day trading period curtailed by Thanksgiving. Just 24 trading days remain in 2022. The Federal Reserve and officials' path forward for interest rates continue to be the main focus for investors, with the U.S. Central Bank's final hike of the year on deck after its meeting December 13th and 14th. Minutes from the Fed's gathering earlier this month and a chorus of Fed officials in recent weeks have suggested a downshift in the size of December's rate increase is likely as policymakers look towards a slower but higher rate regime. Investors are largely expecting an increase of about 50 basis points to the bank's overnight interest rate, a markdown from 4 consecutive 75 basis point hikes. While a deceleration and eventual pivot are highly awaited by equity investors, Wall Street strategists have warned that there is little to be excited about in the new year, even as inflation appears to slow and a pause on tightening nears. Goldman Sachs analysts led by David Kostin said in their 2023 outlook that the S&P 500 is likely to end the year next year around flat, weighed down by the absence of earnings and earnings growth across companies. The performance of stocks in 2022 was all about a painful valuation derating, but the equity story for 2023 will be about the lack of corporate earnings growth, the team at Goldman Sachs said. Put simply, zero earnings growth will drive zero appreciation in the stock market. Yeah, I think that's true, but also if we get a shift in the Fed policy, zero earnings growth in a macro environment when the Fed is easing, those companies are going to be worth more than zero earnings growth in an environment where the Fed is heightening 75 basis points every month. So stocks, in my opinion, can still rise even with zero earnings growth if the Fed begins to shift its policy. If not, I agree with Goldman Sachs. The market should stay flat if there's no growth in earnings and we're in the same macro environment. But if the macro environment changes and the economic climate shifts, then those companies should be valued differently depending on what's happening at the Fed. That's just my opinion. Let's get into the charts. This is the S&P 500. I warned that this 200-day moving average was going to be resistance for quite a while, and we bounced off of that today. It looks like we could be at the beginning of some selling coming off of that. How much selling will there be? It's too early to tell, obviously, but I do think it would be appropriate to have a full leg down into these lows, maybe, or even to 3250, which I've been looking at for a while. I still think that's very possible. So that's what I'm looking at on the S&P 500. If you zoom out, I mean, we're just in this channel. And it makes sense that we bounced when we did. I mean, this is the bear market we're in. Nothing has changed to tell us that we're out of a bear market. Um, the Fed's still raising interest rates. The global picture continues to get worse. Earnings are slowing down. I mean, this is just the market we're in. So we knew that 200-day moving average would act as resistance. It did, and now it looks like we're going back to the downside on the stock market at least. Bitcoin, same thing. Resumed kind of selling off today. I still do expect Bitcoin to at least get to 12,000. I think that'll be the top of the next range that it'll go into. It could definitely get to 10,000. It could crack below 10,000 maybe, but I do think this 12,500 to 10,000 range is a good place to start when we think about where Bitcoin will settle at next. And I don't think that anything between now and then will stop it. I think we see 12,000 at least for sure on Bitcoin. And that's what I'm looking at. So if we see the stock market kind of take that next leg down now that we've bounced off the 200-day moving average, I do think that Bitcoin will follow suit and will drop pretty sharply. So that's what I'm looking at in these markets. Again, not a financial advisor. Do your own research. This is just my opinion, what I see. But you should make decisions based off of what you see. I appreciate everybody watching and listening to today's episode. I'll see you in the next one. Remember to subscribe on YouTube and follow wherever you listen to podcasts. And I'll see you tomorrow.